The FIFA World Cup 2026 is here, and so is a strange market statistic. Since 1990, Indian equities have ended every FIFA World Cup year in positive territory, except one. No, football doesn't drive stock markets, but the pattern is hard to ignore. Now, as the biggest World Cup in history kicks off across the United States, Canada, and Mexico, investors are asking a different question altogether. Can Indian markets extend the streak? Or will 2026 become only the second World Cup year in more than 3 decades to finish in the red? Let's understand in markets this week. Historically, World Cup years have been surprisingly favorable for Indian equities. The gains have varied widely. In 2002, when Japan and South Korea hosted the tournament, the Sensex rose just 3.5%. In 2006, during the Germany World Cup, it surged nearly 47%, but one year stands out. Now in 1998, the Sensex fell 16.5%. The reason had nothing to do with football. India conducted the Pokhran nuclear tests in May that year. The US, Japan, and several other countries responded with economic sanctions. Markets came under pressure amid geopolitical uncertainty and political change at home. The lesson was simple. When major macro shocks hit, historical patterns stop mattering. And that's exactly why investors are paying attention to 2026. So far this year, the Sensex is down nearly 13%. And the biggest concern here is oil. The conflict in West Asia has pushed crude prices higher, weakened the rupee, and increased uncertainty across global markets. Foreign investors have pulled money from Indian equities. The India-US trade deal remains unresolved. And global investors continue to favor markets with stronger exposure to the AI and semiconductor boom. In short, 2026 is facing headwinds that previous World Cup years largely did not. Now, analysts remain constructive on India's long-term growth story. But in the near term, much depends on factors outside India's control. Chief among them is oil. If geopolitical tensions ease and crude prices cool, sentiment could improve and equities may recover. But if the conflict drags on and energy prices remain elevated, pressure on markets could persist. History says FIFA World Cup years have usually been good for Indian equities, but history also offers a warning. The only time the pattern broke was during a period of major geopolitical disruption. That is why, for investors, the real question is not about football. It is whether oil prices, global uncertainty, and geopolitical risks become powerful enough to overwhelm one of the market's most unusual historical trends. Follow Business Standard for more stories.